On April the 2nd, U.S. time, after the stock market closed, then-President Trump announced reciprocal tariffs, quickly triggering global economic tremors. The following day, U.S. stocks plummeted, with Chinese markets following suit, suffering widespread steep losses as the Shanghai Composite Index fell below 3,100 points. The Trump administration's hardline stance and its arguably simplistic and blunt tariff calculation formula sparked significant public debate. The so-called reciprocal tariffs were calculated by the Trump team using a notably basic method, dividing the trade deficit by the import value, and then taking half of that figure as the tariff rate. This plug-and-chug approach led to substantial tariff hikes for many countries. Notably, even a small French overseas territory with only 6,000 inhabitants faced a proposed 50% tariff, while Russia was unexpectedly exempted. This methodology drew criticism for being overly arbitrary, perhaps even capricious. In an attempt to demonstrate the policy's supposed wisdom, Trump even shared a fabricated video on social media purportedly showing Warren Buffett endorsing the move. This claim was quickly debunked by Buffett himself, further highlighting what some saw as a focus on short-term gains and PR maneuvering behind the policy. Ultimately, Trump's tariff campaign had clear objectives: increase tariff revenue, reduce the trade deficit, and pressure companies to reshore manufacturing back to the United States. However, achieving these goals is far from simple. Using U.S.-China trade as an example, reshoring manufacturing requires not only time but also the rebuilding of entire supply chains from smartphones to steel, encompassing technology and factories. This represents a long and arduous undertaking. Moreover, the narrative of an American manufacturing decline can be seen as misleading. In absolute terms, U.S. manufacturing output hasn't shrunk. It has actually grown. The sector's share of GDP has decreased primarily due to the faster growth of the service sector, especially producer services. Yet, Trump chose to emphasize the decline in lower-end manufacturing, using the rhetoric of job creation to stir populist sentiment and attempt to force the return of industries that may have become less competitive domestically. However, this raises questions: are Americans truly willing to return to low-end manufacturing jobs? Would miners, assembly line workers, or residents near potentially polluting industrial zones embrace the return of these specific roles and their associated conditions? Furthermore, higher domestic production costs would likely lead to increased prices for goods. Are consumers in other sectors prepared to accept these higher costs? Data indicates that America's core manufacturing strength lies in high-end sectors. In areas like research and development, marketing, and technology-intensive manufacturing, the U.S. remains a global leader. Products like Apple's iPhones, Boeing aircraft, and Honeywell equipment generate profits and added value far exceeding basic assembly operations. Some argue that Trump's trade war strategy risked pulling the U.S. down from the top of the manufacturing value chain, pushing it back towards lower-end production, essentially creating a problem only to present oneself as the savior. So, the questions remain: do you think pushing for a return to mining and factory floors is worth it for the sake of reshoring manufacturing? If the associated costs are ultimately passed on to consumers through higher prices, are you willing to pay that price? Was Trump's grand strategy truly aimed at benefiting the American people, or were there other underlying motives at play? We welcome your thoughts in the comments section.